Okay, peeps, welcome back. So today we're going to be going over our buys, sells, and dividends for the 11th of February through the 17th of February 2024. Let's get it. So the first thing that we're going to go over is the amounts that we made in terms of profits, options, premiums, and dividends. Then we'll get into the actual finite details of everything. So the first thing that I want to bring up is the profits with you guys. So we made $102.53 on Horizon token. That was actually this morning, right after we woke up. QYLD, we made $6.43. BSTZ, which is the BlackRock Science and Technology Fund, I believe, is $6.52. NVIDIA, which is the Yield Max ETF, we made $9.05 off of the holdings that we have in M1 Finance. And then HSEN, which is the Grayscale Horizon Trust, we made $130.06. If you guys have been following our previous videos, you would have known this. So for NVIDIA on Webull, we actually, like we told you guys we were going to do initially, we did actually wait until after the dividend payment arrived, which was, I think, $170 for this current month. And we told you that we thought the price of NVIDIA was going to go higher and NVIDIA was going to go up with it. And that's exactly what happened. So we took $118.72 in profit on that. And we're actually moving those funds out of Webull into Robinhood for the potential to write more recovery calls. So the last position that we took profit on was the Hut 8 Bitcoin miner stock. This is based in Canada. Those of you guys in Canada, shout out to you. We made $190.96 off of that trade. So that is just the trades alone, quite a bit for the week. And that total comes out to $564.27. Now, get into the options covered call trades. So we'll get into the finite detail in a minute, but we've made $241 as of this week on options premiums. So there are some contracts written out in time for one is for $64 in premium and the other is for $60. That's on BTBT. So this is basically on two contracts. So that would be 32 times 2 and 30 times 2. And then Cypher, we made $30 in premium on one contract, but then we rolled the contract out for another $50 in premium. So that's 80 total. And then the second contract that we took up, because we now have 200 shares of Cypher, was for another $37 in premium. So that total comes out to $241. And in terms of dividends, we did not get that much this week. As you guys can see, basically all we got was on M1 Finance, and that total was 30 cents. So it's not really much. If we actually go back here in history, you guys can see that generally speaking, we do not really get a lot of dividends in the middle of the month. It's a relatively small amount, so we're going to have to definitely pick up some more monthly paying dividend stocks that dish out some dividends in the middle of the month, because we don't have that many. So if we go ahead and add the numbers up here, so it's 241 plus this current amount plus 30 cents. So our total comes out to $805.57 for this week. Again, this is why we reiterate that we take profits, not just collect dividends, and also now write options, because you never know when those gains could come in handy on weeks that you may or may not be receiving a lot of dividends. So with that being said, we're going to get now into the finite details. So there's not really much to cover here on M1 Finance. We'll take a look at the actual positions themselves. So we've pretty much just been doing the dividend capture strategy, which was pretty much buying ahead of the X date for any given position. As you guys can see here, we have EFC. This is currently a buy. We've been buying up a lot of EFC actually, because the X date is on the 27th of this month. So you guys can see we currently have a buy for $20. We've kind of been doing this throughout the week. We'll go over those trades in a minute. So we have $1,000 invested, 75 shares after we buy on Tuesday, because the market's going to be closed on Monday. The share count's going to go up, and that comes out to I think $12 a month or something like that. Not sure what the exact amount is, but it doesn't matter. It only matters that it increases over time. So you can see Tesla's coming back up. That's also nice. I think we bought into a little bit of RIV, PDI, and I think we also bought some RA this week as well, because as we told you guys before, that one's been getting kind of trampled on due to the fact that they reduced their dividends by a little bit, and investors didn't like that, so they decided to dump their shares, which is only natural. It is understandable from an investor perspective. So now let's take a look at the transactions. So here's the 12th. This would have been the first trading day of the week. You guys can see that we bought some OPP, some BSTZ, and some RIV. I believe this $130 that we invested in was the profits we made from HSEN. I could be mistaken, but I'm pretty sure that's what that is. And keep in mind, these were all ahead of their respective ex-dividend dates for the month. So there's $20 more of RIV on the 13th. And now we'll go over here to the 14th. You guys can see that we bought a little bit of Horizon before their ex date, which was on the 15th of this month. Now we're going into the 15th. So you got 3 sells. We sold QYLD, BSTZ, and VDY. This is when we took our profits on those days. We took 5% up, 5% off of the top of each of these positions plus the profit and rolled it into EFC, which is undervalued. We've explained this strategy to you guys before on this channel. And on the 16th, pretty much just all buys that day. So we bought back into QYLD, NVDY, EFC, or EFC was actually the average cost basis, DCI, I mean, and then BSTZ. So now we're going to go over to the Fidelity account. You guys can see here we still have a massive amount of cash. So if we do nothing with this money, and we don't get the dip buying opportunity that we're expecting this month, then we still make $30 in interest income because the Fed funds rate's still at all-time highs, which means the savings rates are going to be elevated. So that will definitely be nice, and we'll be waiting to buy the dip on these. But we have not sold LTCN. You guys can see we're positioned currently. We have no intention of selling our shares, especially not at 12.47. If it went up to if this thing went up to like 30, 50, $100, we might reconsider, but especially if it gets to like 250, 300, $400, I mean, yeah, obviously we're going to take profit at that point. But as of right now, we're just kind of in a holding phase. So that's what our current positions look like. No buys or sells on BCHG and LTCN this week. However, you guys can see here on the HSEN. So this is HSEN. So we bought 159 shares at a price of basically $313. And on the same day, we sold out at the exact same 159 shares at $394. So if we take a look at the chart of HSEN, I'm actually going to pull it up right now so you guys can see. Basically, this thing had a ridiculous move, as you can see here. This was just absolutely crazy, and we said, okay, this thing's probably going to pull back. Let's go ahead and take profits and wait to buy the dip. And you guys can see that's pretty much what happened, although I would say this is still a little expensive. We don't really want to buy here. So we basically made a quick $130 in like an hour or so. We had no idea it was going to play out like that, but that's essentially what happened. So now going over to the native crypto portfolio, you guys can see that as you take a look at the prices here, it's very, very volatile compared to stocks. That may not be something that everybody is necessarily comfortable with, but this is the nature of crypto. If you want to make money in crypto, you got to be willing to risk money, and that involves some serious, serious volatility. And I do mean serious, like ridiculous volatility, as you guys can see here, just absolutely insane. So with that being said, we're going to go ahead and go to ZEN here. As soon as it wants to populate, there we go. Just going to have to give it a second, fellas. Sometimes things are a little bit slow. Okay, so finally loaded up. All right, so we're going to click over here to the primary balance. Now, It should be pretty obvious what the difference in profit is here. So we got 30, 40, 80, 160, 240 plus another 80. So that's $320 if you total all that up. And then obviously deduct that amount from this, and that comes out to the profit that we made in not HZEN, ZEN, the underlying token this morning. And we're also going to show you guys that on the chart, so you can basically see that Horizon wasn't really doing much of anything. It just kind of, up and down, up and down, up and down. And then it out of nowhere just had a massive spike. Again, we were not expecting that this morning, but when we saw it, we said, okay, we're going to go ahead and take profit because it's hitting resistance, and this thing's kind of just really looking a bit ridiculous. We don't want to get in at this point. So basically, pretty much what we did is we took the money out of Horizon and we moved it over to Decentraland. So we currently have a much larger position in Decentraland, as you guys can see. And if you look at the two charts, it should be obvious which one has more immediate upside here. So you guys see that Horizon is already at resistance. Is it at the top? No, but it is in the resistance zone. That is a potential sell signal for us. And then you can see that Horizon has a massive, massive amount of upside potential here to move up to the next resistance if it's going to. It hasn't yet, so we decided we were going to take advantage of that in the immediate short term. So now going over to Robinhood, you guys can see that we have our options trades here. So basically on BTBT, we have a $3.50 call and a $5 call, and on Cypher, we have $5 and $5.50. We pretty much rolled out a couple of these contracts because to a later expiration date. Those expiration dates are in June and in August because the price shot up so aggressively that we thought we were going to get our shares called away, and we didn't want to do that, so we went ahead and rolled the contract. So that's what that currently looks like. I mean, we could take a look at a couple of these. Not sure if this is something you guys are actually interested in or not, is writing your own covered calls and looking at this kind of information, but this is what it looks like. So the current expiration is 3/15. Again, this is one contract. It's on a lot of 100 shares. And so our credit that we got on this one contract was basically 32 cents times 100, so $32. And I'm trying to see what else. So current price 307. A lot of interest here, as you guys can see, 1,600 contracts at that expiration at that price. The delta is 45, so basically that means as of right now, there is a 55% chance that we are not going to get our shares called away. And there's their 350 call. So that's pretty much that when it comes to options. But we have a bunch of different options contracts here. Now, in terms of rolling the contracts out to a much later date, like June or August or something like that, which is obviously really far away, you're talking like 4 or 6 months away. There's a few reasons we do that, because we don't want to sell our shares before the bull run's over. But in addition to that, we could just simply buy more shares and write more covered calls if we need to for closer expirations, while we let these ones just basically sit here and we build up some back-end positions. So now we're going to go over the actual yield max ETFs and Defiance and all that jazz. You guys can see that we have a lot more shares of Coney. As we told you guys, we sold out completely out of our NVIDIA shares on Webull, and we went ahead and loaded the boat on Coney. So we're going to take a look at that now. So scrolling up here, you guys can see that we were basically DCAing in, slowly buying shares, and then we bought a massive amount of shares here. This is out of some of the funding from NVIDIA, because if we look at the charts, which we will in a later video, we'll compare the two, but you guys can see that Coney, or Coinbase, I should say, has a lot more room to run up potentially than NVIDIA does in the immediate short term. So you guys can see we were buying all the shares here. Eventually, we'd like to get to 100 shares of this so we can also write a covered call on these shares of Coney. So now scrolling down, this is HUD 8. We may just end up going out on a limb here and buying 100 shares right out of the gate of HUD 8 on Tuesday when the market reopens, so we can get that covered call. and be positioned for the bull run since we have all this excess capital that we just raised. So going through the buys and all that jazz here, you guys can see that we bought some Hut 8 on the 13th, and then of course we sold for a profit. You guys can see the amount of shares and the amount that we sold for here on Hut 8. If I actually look at the, give me a second to look at this, I can look at the cost basis for Hut 8 here on the spreadsheet that we have. Our cost basis was $7.34, and then we took profit at $10.25 on a total of 65.4 shares. You guys can do the math on that. But then we bought in a little bit more immediately right after that because we want to hold these particular 3 Bitcoin miner stocks through the halving and also the bull run itself. So here is BTBT. You guys can see that we tried to write some covered calls on these shares and we could not get a fill because of whatever reason. Maybe there wasn't enough interest or something, not sure. So we had to cancel, and then eventually we got our roll filled. So there is the options contract right there on the 13th, as you can see, 2 contracts. But on the 12th, and again on the 12th, we were buying basically because this was cheaper than a cost basis. And we said, okay, sure, why not? We'll just buy more shares and then write a covered call on it. So that's exactly what we did. Now we're going to go down to Cypher. And you guys can actually see that we're in the money on Cypher. But see, the thing is, because we have, when you write a covered call on shares that you own, even if you're in the money on the underlying stock, you cannot sell it because your shares are being held as collateral while you receive the premium, and until your shares either get called away or you close the position, you're not able to sell even if you're in the money. So we could sell for a profit, but because we have options on these, we can't actually sell until we close the position. So let's go down here to the history real quick. So starting on the 12th, you guys can see that we wrote a contract here. We got, obviously, our position rolled. As you guys can see here, we rolled one, or I guess this was the position that we rolled. So that's where the $80 came from. And then we obviously bought more shares here, basically 47 shares at $3.92. And then went ahead and pretty much put on another contract at that point for another $37 in premium. So going even further down the list here, the other ones that we bought, as you guys can see, we have NVIDIA here, but we're not at 120 shares. We basically cut our position by 75%. Said, okay, we want to have some exposure, but not too much because NVIDIA looks extremely overextended, which again, we'll get into in a video over the next day or two, but it is massively overextended. So we wanted to cut our position and we'll buy back in when prices get lower. So here's the Yield Max fund of funds. This is the YMAX. As you guys can see, we're expected to get $5 on, or roughly $5 on the 20th. We currently have 9 shares at an average cost of $20.90. I would say the price is holding up pretty well so far, given that the market has been kind of shaky lately. And you guys can see the average buys that we've been placing in recent days here. So basically the 12th, we bought 0.95 shares. The 12th again, we bought 6.19 shares. The 13th, we bought 0.97 shares. And the 14th, we bought 0.96 shares. And again, this was ahead of the ex-dividend date, which was on the 15th. So last position that we're going to cover today is the NVIDIA position. Our average cost basis, as you guys can see, is $26.05. That is pretty expensive, but again, we only have about a fourth of the position that we had before. Reason being is because NVIDIA is getting really, really ridiculously parabolically expensive at this point, so we don't want to put too much money in at these prices. This is the current price. And as you guys can see, we bought a pretty large amount, 30 shares at this price yesterday. So, anyways, this is our buys, sells, and dividends for this week. Hope y'all enjoyed this content. Please like, comment, and subscribe, and let us know your thoughts down below. And we'll see y'all later. Peace.